All right. Hey guys, Brad here. Thanks for tuning in. We are going to look at the longer term charts. We're going to go oil, metals, currencies, Nasdaq, and I'm just going to give you the longer term views like the weekly and the daily, maybe a glimpse of some 4 hour charts, but we're going to stay fairly zoomed out just to give you a lay of the land for the entire week ahead. Let's start with the crude oil chart through the lens of Elliott wave. Okay, here we go. All right, so we retain our bullish view of oil. And I know a lot of people got very excited with this move up, but Elliott wave guys know we were tracking potential corrective move as a C wave, which means it should be in 5 waves, which is what we got. And then look at this reaction from these levels up here. It came just shy of really what we were looking for a C wave, which is the 100 fib, 79.89 on the continuous futures contract. But look at that reaction. Then we got what we're counting as either an A wave or 5 down. Either way, same thing with this move up. All the bulls came out and are screaming oil's going to wherever, 90 or whatever. Same thing over here. And we just follow the structure. We don't get into opinions or having an emotional reaction to price action. We're using a methodology. We're using Fibonacci. We're using structure of price. We're using levels. Okay, we're using primarily Fibonacci. So in any case, for the week ahead, if this really is 5 down, and then this bounces, we were looking for it to be corrective. It did get terminated right here at 73.33, which we were tracking on a lower time frame chart. I've taken those fibs off. I wonder if I still have the fibs on the. Yeah, so this is what I was posting in the Professor Trades Club in the Elliott Wave Room, looking for price to terminate up in this gray zone. And I have to say, I pretty much nailed it with this ABC. And look at the reaction. So, but not getting into the weeds for the purposes of this video. The idea here is this is wave 1, wave 2 is done, and then now we have potentially another 1, 2, which is what we'd expect to see inside of wave 3 in an impulse, if that's what this is. If this is an impulsive move down, then this is the first 1, 2, and then now we already have another 1, 2, which means a level to watch early in the week is this low right here. Now this is still to remind you, it's the continuous futures contract on the NYMEX data feed. In any case, 70.16 is a clear level to watch, because if that level gets broken, not to say it's not going to at some point come back up and get above that level, but it should not at any time get above this last high if this structure is going to play out as I've got it drawn up. So I'm just going to give you the floor and the ceiling as it's found on this. Actually, this is an 8-hour chart. So for right now, right, just for the beginning of the week, the first part of the week, here's your floor, 70.16, right? Current price is 70.56 as of Friday's close. So the floor is 70.16 and the ceiling is 71.88. And so the idea is we are in a third wave down. And all of this price action, I mean, this is pretty brutal. Although in the Professor Trades Club, it's not brutal at all because we were expecting it. We've been looking for it. And in the Trade Club, we've been nailing the shorts on crude oil, man. Massive pips inside the club. All right, so the idea is as long as we stay below that last high, 71.88, then personally, I want to see this keep coming this week and come down towards the 1618, which is a standard fib level for a third wave. Okay, now the overall look is that this thing is bearish, and it could come lower than you think. That's just, I'll leave it at that. I mean, a lot of guys, even in the club, there were guys looking for bullish outcomes. And same with gold. It's like every time you can tell if somebody's not using a solid methodology, because every time price goes in a direction strongly, people start freaking out and predicting, oh, it's going to keep going. Well, yeah, of course, because you don't have a methodology. If you're using a methodology or you know where the structure is. See, with Armando inside of the Professor Trades Club, he's a master at identifying levels, support, resistance, supply, demand, whatever you want to call it. The levels where price is more inclined to get rejected and reverse because of what it's done in the past. He's incredibly adept at identifying structure. And the way Elliott Wave operates, Elliott Wave is incredibly adept at identifying the structure of the actual wave. So Armando is identifying overall structure of the market, of whatever market we're looking at. Elliott Wave is giving you an edge, showing you potential structural points within the actual wave structure. So Armando is giving you market structure. Elliott Wave is giving you price wave structure. So it's all about structure. All right. So anyway, that's the deal. I've given you some levels. If you need a target, I don't think it's unreasonable to have 67.13 as a target. Of course, it's not going to move in a straight line. So I would say it like this. As long as 71.88 does not get breached to the upside, it is a reasonable target, 67.13. If you're inside the Professor Trades Club, you don't have to worry. You're going to get guidance in the morning, in the late morning, in the middle of the morning, in the afternoon. You're going to get guidance all the time. Now, look, if you're watching this video and you're getting value from this, give me a like, give me a thumbs up. Go ahead and subscribe so as I'm dropping these videos, you'll get noticed. You get the notifications, especially if you hit the notification bell. If you don't know what I'm talking about, the Professor Trades, you got to join the club. The description is in the link of this video. For a little bit more than $1 a day, you're getting all the professor's teachings and all of his guidance throughout the day, and you're getting access to the Elliott Wave Room for a nominal increase in the rate. It's still just over $1 a day for everything. It's a no-brainer. So click the link in the description. Anyway, let's get back to the analysis. Now let's move on to gold. I'm going to keep it at the daily level to start. Now, this is what's interesting. I moved my wave 4 over thinking maybe it's complete because last week we had such a nice bullish structure, but the reaction, price could not make a new high and came very strongly back down. So that to me says at a minimum, we're still in this wave 4. Now you can see this question mark that I've had over here. And I just moved these labels on Friday before that nasty drop. So now what I'm thinking is what I've been thinking and telling you guys that I don't think I certainly don't think this wave 4 is done. And even over here, I was questioning whether this wave 4 was done because it didn't take enough time. So now look, without creating a giant word salad, which is possible with Elliott Wave, I will just say this. If price loses this support area right here and continues coming lower in the weeks ahead, it is possible that this was a wave 3 extension and that we are now going to get the larger degree wave 4 that I was looking for over here. If you've been following me for any length of time and paying attention to my gold analysis, you'll know that I did not think this burned enough time off the clock for this to be all of wave 4. And then price just really came up. But from this low, this looks just like 3 up. So it is possible that something else is going on and that this count needs to be adjusted. But we don't need to speculate on that. All we can say right now is that we are bearish gold. I mean, we were in the club shorting this. Were we shorting it early? Yes. But did we catch the short? Yes. So, you stop out with, let's say you stop out with two units of loss, but then and you try again, let's say you lost again, another 2 units of loss trying to short this thing while everybody's screaming at you that how bullish gold is. And then it finally lets go and coughs up, a $60 drop. in one day, and all of a sudden you don't hear a peep from the people screaming how bullish gold is, and the 2 units of loss that you got stopped out 2 times with 2 units of loss, and then you made it up with 12 units of gain. So you lose 4, you made 12. It's all about the psychology. Really the question I have for you, this is something for you to think about, because I've thought about it for years and now I understand myself. So do you understand yourself? If the price action is bullish, you suddenly just throw away your methodology and go bullish, it's going to the moon, and throw in a giant long position. And then you go to lunch and you come back and you're down $30 in you're long, and it went against you $30 in gold. Don't do that. That's purely psychology. If that's happening to you, because it happened to me for 2 years. When I first got heavy about Elliott Wave, that kind of thing would happen to me pretty regularly over a 2-year period. And I finally got sick of it and I realized the issue was me. Anyway, that's for you to think about. Are you the weak link in your trading process? Are you? If you think that you're the weak link, then you got to join the Professor Trades Club. He's going to cure you of that. It's about the psychology. And the thing is, when you join a group, that's really where the benefit is. And you're joining a group and people are sharing honestly and openly, and you're getting all of Armando's videos all the time, constantly. He's giving you so much value, especially for psychology. Then you get the Elliott Wave stuff. As your psychology improves, you're going to be able to benefit more and more from the Elliott Wave stuff. If your psychology isn't together, if you still don't have the means to develop consistency in your trading, Elliott Wave is, you're ahead of your skis. You're getting in front of your skis. You need to sit back, learn the methodology, and focus on your psychology. Trade small. Okay, so that's really the deal. So I think we're going to get, as of right now, I'm going to take the price action at face value and look at these fibs. This could very well be a wave 4 of this degree with one more shove higher. It's also possible that this is the top of this wave 3. And we'll know that because it'll keep coming. There's one other option where this could be a B wave. In other words, now this is really crazy, but sometimes it happens. This could be an this could be an A, B, and then now we're still going to get this wave 4 over here. Now that's kind of academic because we're going to follow the price action on a much smaller time frame inside the Professor Trades Club as we do. I'm just sharing with you this long-term view so you can get the idea that we're bearish gold for the moment, and the idea is somewhere down here it could catch a gear, and we'll know because whenever it bottoms, if we see a nano 5 up and a 3-wave pullback and then it keeps coming higher, listen, we're going to be on that. Okay, and in any way you cut it, we're going to be scalping gold inside of the Professor Trades Club. And in some ways, as day trade scalpers, it doesn't necessarily matter what I'm looking at on this daily, but it does matter in the sense that you want to know what to expect. Like, because it is longer time frame fibs right here, we were looking for rejection. And actually, to be fair, as folks started shorting gold, I was still looking for it to come higher. And then when it did, then I shorted it. I did get stopped at least once, maybe twice, shorting a little early. But then once it started coming down, I actually added to shorts on the bounce when it came back up. Blah, blah, blah. If you're in the Professor Trades Club, you're getting these signals on the lower time frames. Okay, so that's gold. These are the levels. You can zoom in. This is what we think is going to happen. You know, I think a reasonable target for gold shorts, even though it's going to bounce. I'm telling you, it's going to bounce. It's not going to come in a straight line, but 28, 26 is not unreasonable. Not unreasonable as a target if you're swing short. Okay, it's another $75 lower. All right. Okay, so moving on. Silver, interesting, had this chance to escape. Finally, the gravitational pull of this wave 4 I've been tracking. Fail. Epic fail. Look at that wick. So if you're in the room, you know exactly what trades I was doing. I was very fortunate to have caught a very juicy long scalp off of this pullback down here. Or excuse me, maybe it was this one. This is a daily chart of silver. This is a continuous chart, a daily chart of the continuous on the COMEX silver futures. So because we did not escape, we did not get escape velocity, it is quite reasonable to expect this to come back down a lot. Now, Am I all of a sudden going to be short silver? No. I don't even like to trade silver that often. I don't want to trade it that frequently. I only trade it when I see something that I'm willing to take some risk for, and I define the risk in advance. And if you're in the Professor Trades Club, you know exactly what I'm doing because I posted it in detail, what I was doing. So the idea here is I'm not going to be surprised at all if silver keeps coming. And now it can still catch support somewhere down in this area, but if it loses this last low, 3160, 3150, if it comes down and loses this low, I'm going to view that as opening the door. And it's also going to be about structure, but it's going to be opening the door to a proper way forward. I said the same thing about silver as I did about gold. Even though the structure is different, the idea is when this bottomed here and silver started going back up, first of all, it only came up in 3 waves. But it wasn't enough time off the clock. Given how long this white wave 3 took to create, it's very unlikely that this right here was the low. Now here it got a little more interesting because you did burn more time off the clock, and it did come up arguably impulsively, but not clean. And there's some overlap in here. And now with this wick, this wild move up and immediate reversal all on Friday has me thinking B wave. So again, I don't want to get too academic on you, but silver, it's coming back. Obviously, price action says that. Failure to get above this level says that. So let's just look at the structure. I'm going to look for a bounce, and I may start scalping the short side to silver. But for right now, I'm doing nothing. For right now, I had an amazing week in silver just because of 2 trades. That's it. That's all you need. So anyway, if you're in the room, you know what happened and you know what I was doing. But for the longer term price action, for the longer term structure of price, this is overlapping. It's moving in 3s. To me, that still says wave 4 until it gets over this last high over here at $35. It's still in a corrective wave action. So the door is soon to be open. I wouldn't say it's open yet, but if it gets below that 3150 area, it opens the door for a couple more bucks down. Anyway, that's silver, okay? So now let's look at Nasdaq. Very interesting also. Now this one did get enough for a wave 4, in my estimation. It is overlapping, and it's a gorpy mess and very difficult to trade, but I've had some amazing Nasdaq long scalps. Incredible. Now what's happening based on structure is we have gotten a new high on Friday. We got a new high. Price came up. It is not unreasonable to look for these higher targets this week. The 1382, which these yellow fibs, if you've been following me at all for any length of time, you know that the yellow fibs are what I'm looking for any 3-wave correction. We got the 100 to the downside right over here with this C wave almost to the penny. And then now we're tracking another 3-wave move to the upside. It's moving in 3s. This 5th wave, if that's what this is, playing out as a diagonal of sorts. Very difficult to trade, but the idea would be inside of this, we are moving up impulsively as a diagonal. I won't get into the lower time frames. This is a daily chart of the Nasdaq, continuous chart daily on the CME data feed. And the idea is 22,500, 22,600, somewhere at a minimum is it not an unreasonable target. The other idea about the Nasdaq is if this comes up into this area and starts creating an impulse down, good Lord, it could be a bloodbath. Now I'm taking off. I was looking for this downside setup, but it failed. I'm taking it off. And so what remains is this upside structure. And of course, the next line in the sand, very obviously, is what we were calling the top of wave 3. Obviously, that's an important level. So this here, look at this. This structure is just, it's really ugly. There seems to be, there's a decent structural point kind of right through the middle of this chop. But the way I'm thinking of this is bullish. I expect it to continue to come because especially it poked above there. after failing over here, massive rejection, but it did not make a lower low. And then it came back up. I won't get into the weeds of the nano stuff, but somewhere 22,500. Let me see where the 1,236 comes in, because that's look at that. That's really interesting. The 1,236 of this move happens to come in right at the last high. So I think it's more likely that it pokes above there. But if you're in the club, you're going to get the guidance on the nano measurements, right? Because this is just the daily chart. So we're drilling down inside of the club and giving you more actionable levels. But that's the plan. And if this comes up into here and starts getting rejected, you're going to see some amazing short opportunities in Nasdaq. I know that some of your head is exploding right now because you're uber duper bullish. It always happens. When price action comes up, everybody gets bullish. When price action goes down, everybody's crying. And you get whipped around by the market and let your emotions be attached to price action. That is an enormous mistake. It took me 2 years to undo that, because I wasn't in a club like the Professor Trades. If you're in a Professor Trades club, you can figure that out in 2 weeks, 2 months, depending on how honest you are with yourself. Your degree, your level, your ability to be honest with yourself is going to be related to your success doing these types of trades in the market using futures, Forex, day trading, scalping. The degree to which you are going to be honest, how capable are you of being honest with yourself regarding your emotions and what you're really doing? Because if you're really brutally honest with yourself and have that capability to be honest, you're going to be rocking and rolling in the Professor Trades Club. I wish I'd have discovered his club sooner, but it's fine. You get it when you get it, okay? I got it, and I want you to get it now. So come in and join the club. You got to learn how to turn off your emotions. All right, so that's Nasdaq longer time frame. Now we're going to move to the dollar longer time frame. I haven't changed this chart in quite a while. The idea here is we've topped in a wave 3, and we are now in a wave 4. It's not unusual sometimes for many different sectors of the market to have similar looking wave counts. It's not unusual, although we treat every chart on its own. It's just interesting as I'm showing you all of these different wave 4s that we're looking to in different instruments. So price came up to the 1,236 of this move, which is a very complex overlapping move, moving in threes. Could that be a B wave? Yes. Could the characteristics of a B wave be overlapping, moving in threes, and include a lot of complexity? Yes, absolutely. So, at first I thought it would stop here at the 1, but it didn't. It came up and just wicked above the 1,236. Look, if you guys have been following me, I'm putting the same fibs on the same, on different instruments, but it's the same idea over and over again. Why do I keep doing the same stuff over and over again? Why? Well, because it's effective. That's why. Because it works. So if you know what you're doing, Elliott Wave is going to give you a massive advantage for risk reward and looking at where you're wrong. That's why being self-honest is critical in trading. You got to have the ability to be honest with yourself and kill off the emotions and just be objective. Well, how can you be objective in a non-linear, complex system like markets? Very difficult, very difficult. You got to have a methodology. But you also understand the methodology is not creating predictions. The methodology is creating parameters. Then you make your trade based on your definition of risk. You want to use a methodology so you know where you're wrong. It's not that you don't want to be wrong. It's not that you should be afraid of being wrong. It's that you want to know where you are wrong. And that means you know where your stop goes. I like to use stops based on structure, which means I have to trade smaller than I want to. My greed wants me to trade big and make a lot of money real quick. The objective part of me that is successful, consistently capturing gains, is the part of me that keeps it small and use stops based on structure of price. Okay, so look at the dollar. A, B, possibly complete. I think so. Looking at the lower time frames, which we share in the room, the Professor Trades Club. So I think it's coming down. Can you imagine another 1.5 to 2 years of a weak dollar? You know how bullish that is for a lot of different instruments? We'll see. Each chart on its own. But this is the idea. It's coming down impulsively, that I can say for sure. So yeah, it's going to bounce, it's going to move around, but the dollar is coming down. That's the plan, that's the deal, that's what structure is saying. We will keep monitoring this closely because there's so many other asset classes are affected by what the dollar does. Let's look at the JPY. I've been tracking this. This is also a daily chart. JPY comes down. I'm viewing this as wave 4, and this is wave 5. Came right into a ratio box. The thing I don't like about it is it came up short. It is possible this is some kind of a correction, but you know what? This looks very corrective, and this looks impulsive. So if you just take price action on its face, yeah, this hit a ratio box. Look at the reaction it had from this ratio box. This could absolutely be the bottom of a C wave, and then now we're coming up strongly in an impulse. And if that's the case, this could be wave 1. Wave 2 may have already bottomed, and as you know, we look for the 1618. So that is the deal. Now this does look like 3 waves coming down, and then it came up. When it came back, it did make a higher low. So it's possible this is building a series of 1, 2, and then another 1, 2. I don't like this overlap, so the jury is still out. But I will just say this. It made a higher low, and it's holding over there, and it moved up, and now it's got a correction, and it stopped going down, and now it's coming back up. So on the lower time frames, we are tracking this, and we are paying attention to other currencies. So it is possible that the JPY, I mean, they can only print it away so much. They can only keep it weak for so long. They've done an amazing job of whacking the yen so that their economy can stay alive. I'm just kind of showing you this move down, going back to coming out of COVID. Looks impulsive. And the way I measured it, this is where I thought it should terminate, and look at the reaction from that level. So there you go. We'll keep an eye on this for you. This is the daily. Now, some of the charts that are related to that, check out UJ. This is a weekly chart of UJ. Got a juicy bounce. This is the weekly. It's possible, because the way I've been tracking this, it came up a little short. Could this keep coming? Of course, anything can happen. But the way I'm viewing this is the C wave of B, and this is the 1, 2, 3, 4, 5. I mean, I'm not just throwing these on there. These are following measurements, following parameters based on Elliott wave. This is a weekly chart of the UJ pair, and I am short and prices coming down. So there's a couple other pairs. What was it? I think there was I'm missing a pair in here somewhere. Oh yeah, the G. Right. Yeah, the UJ and the GJ. So, you know, if the yen is going to keep coming up, as I was just showing you, is possible, right? And if it does, it's going to take fewer of them to buy the pound. So it's really it's always kind of a race. It's always a race between currencies. That's the way I view it. It's kind of a race to the bottom in some ways. Okay, so I do have a short. I've taken it off and added it back, but I do have a short here, and that this is the idea. This thing is an overlapping mess in both directions, but I have to view this as corrective, which is how I was tracking it. And it has failed to make any kind of higher highs, and it's coming down, and it's making lower highs, and it's making lower lows. So that's why I'm short. And this is the idea here. Yeah, I've already let it come back up on me, and I've scalped and taken off and added back a few times. And earlier last week I added some. So we'll see what happens on that. But again, this is a 2-hour chart of GJ. I thought I had a EU. Oh yeah, so I did have a EU chart. Now, as the dollar comes down, it's going to take more of them to buy the euro. So what I was just talking about, how the dollar perhaps has topped on a weekly chart and has begun the impulse down, then as it rattles around and comes down, it's going to take fewer dollars to buy a euro. So when that happens, this pair goes up. So I am long, and we did make it over this pivot. So what I'd love to see is that if this is going to continue in a sort of a standard impulse structure, this being the 1-2 right here, then this is an inside 1-2 that makes up wave 3, which is the 1-6-1-8 right here. So if this pair is going to hold this pivot, ideally that's what it does, is it holds this pivot zone. That's why I have those arrows there. And then it's going to keep coming up. The next area of resistance is right here at the 100 fib. And if it can get above there, by the way, nothing moves in a straight line, so I'm expecting this to rattle around. It's never going to be easy, but that's why you trade small. If you're going to trade on a longer time frame chart, like a 4-hour chart, a daily chart, or a weekly chart, you better stay small. And then I'm scalping. I have 2 different accounts, so I may have different trades going. Sometimes I'm long in one account and short in another, because it depends what time frame I'm looking at. Anyway, so that's the deal on the EU. 1-6-1-8 is a reasonable target if it can hold above the bottom of this pivot. So basically, bam, I just gave you a whole bunch of the longer time frame charts. Again, if you're struggling with trading, I can't recommend the Professor Trades Club highly enough. If you're getting some value out of these videos, give me a like. Go ahead and subscribe, so every time I drop one of these, you'll be getting it. And if you really want to get the details of the internal structure of these wave counts and get the signals and get all the benefits of being in a club full of like-minded people, you got to join the club, man. It's a no-brainer. At that price, you're not going to find anything like that, especially for the value. I mean, honestly, between me and you, that club is worth 3 times the cost. Just telling you what it is. But it's because of Armando's attitude and how his purpose, Armando's purpose. That's why the club is so cheap. Anyway, that's the deal. Thanks for watching. I'll see you inside the club, hopefully. All right, now, take good care. Don't get killed. See ya.